Hey everybody, Ron Phillips here. In the last video, we went over the first part of the millionaire secrets or financial statements, and hopefully at this point you've created your own income statement and you have created a goal income statement, and now you're ready for the balance sheet. All right, and so the balance sheet is going to be your assets and your liabilities, and it's going to give us a really important number. If you remember, in the last video we talked about doing a goal for your net worth, and so today we're going to find out exactly what your net worth is right now. All right, and so to do that, and again, this is a really important step, so please do this, okay? We're going to list, and we're going to take the exact same example, so same couple, we're going to bring them over here. You're going to see that there's a couple of things that are different, just to make the numbers easy to work with, okay? And I'll explain those to you, okay? So the first thing is your assets. And what you do is, when you're listing your assets, we're going to list them, and we're going to list what they're worth, okay? So the real value of these assets, okay? So your primary residence, if you don't know what it is, then make your best educated guess, okay? In this example, our primary residence is worth $300,000, okay? And then we want to take, after that, all of our cash, okay? And that could be in several different accounts at the bank, but anything that's liquid, any of your liquid cash assets, those go here, and in this case we're going to have 25,000 of those. And then all of your retirement accounts, okay? 401k, IRAs, 403bs, any of those number letter combination accounts, we're going to put those here, and we're going to put them all together. If you'd like to, you can separate them out, and that will actually be helpful in the long run. But if not, you can just put it here as one big number. Next, you have your stocks. So stocks, bonds, mutual funds, we're going to lump all those together. Those are actually liquid. They're not, these are things that are not in a retirement account. Okay, so these are just trading funds, you know, stocks, bonds, mutual funds, things like that you have that are liquid investments. Okay, and then anything else, other real estate. So if you owned, in our scenario, if you remember from the last video, this couple doesn't own any investment real estate right now, but if they did, we would list those out here and what they're worth. And then anything else. I mean, if you got some gold bars in a safe in the house or whatever, those assets all get listed here, okay? And then we total those up. Now, correspondingly, there are going to be liabilities, okay? And so we're going to list those over here. If you have a first mortgage and a second mortgage, you're going to list those for your house, okay? And so you put those over here. In this case, we've got a mortgage that's $250,000, a house worth $300,000, okay? There may be some of you still who have negative equity in that your house is actually worth less than what you owe on it, and then you would put that here. So if the mortgage were $350,000 and the house is worth $300,000, you'd still put that on there, okay? Second mortgage, and you got car loans. Now you can notice that I didn't list cars over here. Cars are a depreciable asset. I don't like listing them as an asset, but if you have a loan on it, then you need to list the corresponding asset over here so that they balance. Does that make sense? So if you have a car that's worth $25,000 and you owe $20,000 on it, then you're going to need to list that asset over here, okay? Because it is an asset. Although it goes down in value, hopefully you're paying it off at the same rate as it's going down, okay? And then your credit cards. Now you notice that I don't have any here. That's because it was a very minimal number, and I just wanted to make my math a little bit easier. But you remember we did have a credit card payment, and so that credit card payment, the total amount that is owed on those credit cards would go right here. And then any other installment loans. We also talked about your student loans, any loans to mom and dad, or brother, sister, cousin, whoever the loan is to. All loans are going to get listed here. So all of your debts are going to get listed here, and it's the total amount owed on those debts that's going to get listed. Okay? And then you're going to add all of those up. So we have total liabilities and we have total assets. When you subtract your assets or your liabilities from your assets, that will give you your net worth, current. Okay? In this scenario, if 400,000 minus 250, that means our current net worth is actually $150,000. Okay? Now, if you have a positive net worth, that's great. You're doing really well. If you have a negative net worth, that doesn't necessarily mean that you have no assets to work with. It just simply means that the balance of your assets is out of whack and we need to work on that. Okay? So don't get frustrated. Now, I don't think I've ever sat down with anybody where their net worth goal and their net worth current were equal. In other words, I don't think I've ever sat down with anybody who has met their goal and they're done. Likely because if that had actually happened, they wouldn't be talking to me. They wouldn't be trying to figure out another way to make this work. They've already made it work. The second reason for that is that I really believe that as we increase our net worth, we expand our vision of what is actually possible, and so this goal continues to go up. And so we actually never hit it. All right, and so this is a really good number to work off at first, but you're going to find that as you realize that this is real, that you actually can make this happen, this number is going to go up. All right, and so don't get too depressed about the discrepancy between the numbers. If there's assets over here, then there's something that we can work with to increase this number to make it get closer here. All right, so what this should give you, both of these two financial statements, is this should give you a really good idea of where you are. Now, some people get to the end of this exercise and they think, I don't really know a whole lot more than I did when I started. I've put all my numbers in the sheets and I know what the numbers are, but I don't really understand exactly what it means. And I don't understand what this means in relation to investing. And that's where we can help. We can actually tell you what you can do, and then you can go out and do it on your own. You can do it with our help. Either way, you need to start with a plan, and the plan comes from assessing this information, this financial information, and putting together a plan that works specifically for you. There are a lot of real estate investment gurus out there, and everything they do is a one-size-fits-all program. But that's just not accurate, because I never see any of these that look exactly the same. They're all different, and everybody has different goals as well. You have different goals, you have a different starting point, and it's really critically important that you use this documentation to be able to assess where you are and figure out the best path to get to the next step. So in the next videos, we're going to be talking about what you can do with these assets, how to utilize some of the ones that are a little more difficult to get to, such as your retirement accounts and your equity and your properties and things like that. They're a little more tricky to access. So look for the next video, and we'll pick this up right where we've left off, and you'll have all the ammo to understand the next videos. So if you haven't done this, do it now. If not, if you have, I'll see you in the next video.